Good afternoon, traders. This is Christian Farmer, Strawberry Trade Group, and this is your end of day market recap for Wednesday, January 8th. As a reminder, the markets are closed tomorrow. I think everybody knows that at this point, but I'm going to say it anyway. And then on Friday, and I think, if you look at today's price action today, very choppy. I think that the market wants to get through some of these events. This has been a pretty event-filled week in terms of economics, bond auctions, and so on and so forth. Risk disclaimer in front of you, by the way, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only, not trying to give anything other than this video being for educational purposes. Read the full risk disclaimer there. So economics. And then we'll talk about this video. I'm going to try to make this as helpful as possible, as I always do, but I'll try to go over some single stock charts because I don't do that in a lot of videos because I really try to save that for members. But so before I do that, the events at hand, or what's on the radar for Friday, they're looking for change in non-farm payrolls of 165. That's the expectations. Change in private payrolls 138. So that'll be interesting because we've gotten, if you go back to, basically the beginning of this year, just to kind of summarize what we've been getting in terms of economics, we had the ISM manufacturing, which we're not really a manufacturing economy, so this number is always less important than the services. But this number came in a little bit better than expected. Remember yesterday, which caused yields to crank up yesterday, the services number came in 54.53. So these numbers are coming in better than expected. So the question is, will the jobs number come in hotter than expected? I don't know, but I don't think it's going to miss that badly if it misses, considering that we've been getting some better jobs reports. Remember, the JOLTS jobs openings came in much higher than expected too. So, there could always be something in there. You don't know in terms of, like, I know that, if you listen to like Zero Hedge or something, they've probably been talking about a lot of the growth has been coming from the government. The government has been ramping up a whole bunch of different, hiring for a bunch of different jobs. Who knows if they're still doing that? It's going to be very interesting once the new administration comes in about like what these numbers do. Like, because if you start slashing away like the government jobs, you're going to find that the change in private payrolls and the overall numbers are probably going to be a decent amount less. So I'm not going to get that more sidetracked there, but just to mention that we do have that number on Friday, which could be market moving. And, there was some data, and I think I put this out earlier on Twitter. Let's see if I can find this. All right, Bloomberg put this number out on Friday. This morning. They put it. This is the days that how much the S&P moves when we have the jobs numbers, the NFP, so non-farm payrolls, and we're applying about 1%, right? That's the straddle price. So it seems like if you kind of look at the trend here and what's been going on, this is the range, I guess. That the numbers, like the market has been emphasizing a little bit more of the jobs data, probably because the Fed has been emphasizing it as well. So, there's a chance that the market could move decently if the number is much different than expectations. So that said, so we've got some event risk, right? Just like you do on Fed days and so forth. So let's take a look at the fundamental. Let's take a look at the what the charts are telling us as of now. And of course, we don't have a weekly bar yet. I was just looking at NVIDIA. There's an announcement there with Biden, but I don't think that's going to move NVIDIA that much, maybe just that little knee-jerk reaction. But let's start with bonds, because this was the third bond auction of the week. And today was the 30-year bond, and the demand was a little bit better today, right? And again, we're just looking at TLT, which doesn't cover all these maturities. I think the duration of TLT is about 18. So we know that the trajectory has been down, the trend is down, but we got a little bit of a bounce today. So we've gotten to the point where we're kind of oversold in bonds. I know it's getting so much more attention. So, no change in trend, but at least, we started the day lower. You got a green candle for the day because we started the day lower and we came back a little bit. So let's see if we can build off of that. There's also this virgin point of control that's taken out. Usually we get some type of digestion. take a look at the last time that this version point of control was taken out, right? This was all the way, back in April, and we went a little bit lower, and then we came back and we rebounded quite a bit, and then we had a bond rally on our hands. But it's interesting, and that's where the VPOC comes from, because this point of control price did not come back and fill this in, so now price has done that. So we're at some support. Let's see if support will hold, and then this will be great if we do something like this again, or at least like I would take a bounce, because in my opinion is as long as there's not major volatility in the treasury market, then it's not going to affect equities. I'll say that again. It's not so much the overall level, it's the volatility of the move, because I think that the market can adjust, right? But when you have fast aggressive moves, right? And here's, by the way, the volatility of this is the volatility across all treasuries, right? This is like a homemade index that Bank of America made up. And the volatility was much higher in October, and not so much now, even though, so again, like the move has been like slow grinding lower, until we recently have moved up a little bit. But it's just the volatility is not that large as we've previously seen. Even back in August and April, right? Look at the volatility then. So the volatility is just not that high right now. All right. So in any event, that's bonds. Let's talk about SPY. Um, so we're kind of like we're trying to hang on here. So this is not really a position of strength. We want to see price get back into the value area for the month. We're also below the 50-day moving average. So just by definition, right, we want to understand like what the charts are telling us. And typically below the 50-day moving average is not a position of strength. Now we're very close here, right? I mean, we're I think within a percentage of that 50-day moving average. So let's see what we do on Friday. It could be make or break. We could spill lower. That's definitely there's a chance that that could happen. And like I said, like try to think about these things somewhat objectively. I said this towards the end of yesterday's video. I did like almost like a 30-minute video yesterday. Try not to do that now. But the last thing I said is think about the silver lining in this. We're going to have earnings reports in about 2 weeks in terms of, well, we're going to get the banks first, which will be the end of next week. But then we're going to get like Netflix reports. I think it's 13 days away, Netflix reports, right? And then we're going to, then the earnings reports are really going to pick up. Do you want the indices at the all-time highs with all the earnings reports happening? You could argue that maybe you want to see a little bit of dip prior to earnings reports, and then it might set up better for earnings reports. Just a thought. So you could kind of think about that in terms of how this is going to play out through January, because I think it's January 21st. But I covered this in yesterday's video, so I'm not going to go further. But so this way you're not thinking like, oh my God, it's going to be horrible if we go down 3 or 4%. It might sting if you've got a lot of exposure on, but the point is here, like I'm not, fully loaded on positions or anything like here, because in my trading account, because we're at a position of weakness, right? We're right around the 5-period moving average, and we're below the 20 and the 50. And the other thing is the market's been acting very whippy over the last couple weeks. So regardless, like even if we were like back above the 50-day moving average, I wouldn't be like, oh my God, this is the market looks great, right? Because it's just acting very whippy since that FOMC report that we had a couple, going back to December 18th. This market has been just kind of oscillating back and forth. Now, again, we're still above the value area for the year, but that's about 4% away. So you have to be mindful of that air pocket. The Qs managed to stay inside value and above the 50-day moving average, but like I just said, like I don't think that's really like a strong position here, right? Because we've made a series. I haven't heard too many people talk about this, but right now we're in a series of lower highs. Here was the high right before the last Fed meeting, lower high. And I tweeted this one out, and this is a lower high as well. We're not taking this out. Now, again, we could just be consolidating here because we're really not we didn't make a new low here, which is good. So we're kind of in this consolidation type triangle wedge type pattern, however you want to classify it. And all that means to me, like I don't care how you really classify it, but eventually we're going to break out of this, right? And maybe we need to kind of go further down this like wedge or triangle before that happens. I don't know, but I would be very wary if we do really start to have another one of these red candles and we break below. Now, let's talk a little bit. I haven't really been talking too much about IWM just because I'm kind of just it's just it's too difficult for me. Some people love the swings in IWM. By the way, IWM could really move on Friday because IWM really likes to move when there's economics or when there's a Fed meeting, right? It seems to move its biggest days. If you go back and look at these gaps, right? This was, of course, on the election, right? It loves IWM loves events in terms of volatility. It really, really moves, whether it's a CPI report, whether it's a jobs report, whether it's a Fed day, whether it's election. IWM will move. So just keep that in mind for I want to say Monday, but Friday, right? For Friday's jobs report. All right, so that's the main thing. And like if you like that, if you like a gappy, sideways, crazy market, then you like IWM, right? And of course, there's chance to make money on options when if you guess the right direction that it gaps. Um, so in any event, I wanted to go through some stocks with you in this report. So first of all, like Costco just reported numbers. This has also been something that hasn't fit right with me, because Costco's below its 50-day moving average. I own Costco in the TTG trend portfolio. I have for probably years. Could this be a bear flag that's developing? It could, but you just had Costco come out with really good numbers, right? The December numbers that Costco reports same monthly sales numbers, which is a little bit different. And I hope that they continue to do that because you get some interesting surprises. But they come in, they report the comp sales 9.8% versus 5.2. We saw a couple months where they actually missed expectations. Again, these are expectations, right? So you have to kind of take this with a grain of salt. It's just like when earnings are gonna come out. It's all about expectations, not whether or not they had good, not whether or not they had whether or not they made money. It's what the expectations are. So this coming in and total comp sales 7.4% versus 3.7, very, very strong. So let's like I'm interested at this point when we look at if we look at the 1 hour chart, right? Maybe this kind of gets this out of that possible bear flag, and starts to break back higher again. So will be very interesting to see that. So that's going to be a stock to watch. Let's talk about this little stock called Apple. All right, Apple's gotten downgrades, I think a couple downgrades from some brokers, but it's kind of hanging on here. I traded Apple today, but I didn't hang on to the position because again, I just don't want a lot of exposure into Friday. I want to see how things materialize. Right. Another point to make too is I made this point in the beginning of the year, and I said, hey, I'm really kind of unsure the way that this year is going to go. I'm still unsure about the way that it's going to go. But sometimes you will find, as long as you're doing your homework, right, and looking for, preparing a little bit and saying, hey, these are some stocks that I'm interested in, right? Then once you do that homework, mostly while the market is closed, then you could be ready for some of your setups to actually trigger, right? And to also be open-minded in terms of some, positions. I did that like one of the first trades that I caught this year was CEG, right? And CEG, I was just kind of thinking of as a trade, right? It was carving out a bottom here. It was on our watch list. It triggered for me. I had an alert, and then I got lucky with a news story, and it moved up from about like 230 to my target, which was 266, which is the VPOC target. I took the trade off then, and notice what it did. So again, like this is all preparation, right? Saying, hey, I have CAG on the watch list. It triggered, I executed, and I knew where I was going to take off the trade, which was 266. And I did that, in the trading room, carried that out pretty decently. Right. So this was on Monday, again, not being greedy. So I think like that's the one takeaway that I have so far to start this year is don't be super greedy. Like, and I think with what you saw in the quantum stocks today too. First of all, the quantum stocks, I've talked about these a lot of in these end of day videos, but this is a very, very volatile group. You have to, in my opinion, I don't want to say you have to do anything. You do whatever you want. But if you're not measuring some of these moves that these stocks move a day, and how you could do this is very simply. You could look up what's called the average true range. Every stock has an average true range. You could look it up on different platforms, but you could look up, for instance, like, one of the names, RGTI, right? So if you look at RG, sorry, I didn't do this preparation earlier because I'm busy all day long. But the average true range shot up to about, where's my calculator? $3, right? What's $3 divided by the stock price, right? So the average true range, by the way, and going back to December, was like less than 50 cents. The average true range, let's say 250. Let's forget about today because it moved again today. But let's say that the average true range of, let me bring this stock chart up so you see what I'm looking at. Okay, so here we go, right? So $2.50 is the average true range of this stock. Now, obviously, it moved much more than that today. It moved 45%, but the average day that the stock moves is about 25%, right? Let me say that again. It's $10. So the average true range, so the amount, so why I'm doing this, why this is important, is because you need to know the volatility. Some names, and especially something like this, or any other like momentum, when we talk about momentum names, right? You need to know what the percentage move the stock does in a day. So even like the stock moved 45% today, which is essentially like almost two times what it normally moves. But are you comfortable with with a stock that's around $15, that it moves 25% a day, right? Probably not. So you got to be really careful. You have to understand what the volatility is in some of these names and whether or not you're going to play in the sandbox of some of these names. Right? And I'm sorry if anybody got beaten up on quantum names. Like I always like, I hate to hear that or something. But if you had the right position size, at least you were kind of warned and it won't be too damaging, right? Because once you understand, like, okay, a stock moves 25% a day, that's much different than an Apple or a Google or whatever, then you can size it appropriately. And you could say, geez, I'm not comfortable with that. How much of a move do I like? So even if you take 100 shares, just 100 shares of this name, right? So 100 times, let's say where it was trading on yesterday, $19, right? So it's a $1,900 investment. You have to be comfortable with that the stock is going to move about $500 a day, given, given position of $1,900, your position is going to fluctuate $500 a day based on that average true range. So if you're not doing that exercise, right, and understanding volatility, then you're going to have a lot of surprises if you're playing in the sandbox of momentum names, right? So it's always important because you do not need the same size, nearly like even remotely, even something like a Salesforce or I don't know what another name that another name that I'll try to like, or NVIDIA, right? These names are so much different. So in any event, very interesting moves that happen, and some names have just gone too far. Look at how far this was from its value area for the month, right? I mean, $7 above its value area for the month. These are that very extreme moves, right? And that's the other thing to kind of keep in mind. Look at IONQ. All it did was return to the top of its value area for the year, but down 39%, right? And still way above where it was a month ago, 2 months ago. All right, so I'll move on from this group. Other things to kind of, couple names that I'm in and I've been trafficking in is GEV. I talked about how like you do want pullbacks in some of these things. It does get a little bit scarier when the market is not on a strong footing. And that's why it's tough to add to some of these names on dips when the market is kind of teetering and the overall market has not been acting well when you look at overall breadth, right? There's been a lot more names that have been going down versus going up, right? So that to me, it just, some people don't care about that. I do, right? And that's all, I guess, personal opinion. But, look at the S&P. There's only 18 stocks out of the 500 stocks in the S&P that made a 4-week new high. You're dealing with a very difficult market versus 137 names. 27% of the S&P made a new 4-week low. To me, this is confirming that there's many more names that are going down right now that are going up. So that's not a position of strength. Are there some good stories and positive stories out there with the market? Sure, absolutely. But there's a lot of negative stuff too that's going on, and I'm not making it up. That's the numbers. The numbers should be telling you that we're not on a strong footing right now. So you kind of have to balance that right now. That the market, and we did have a couple good days of breath. I think we had 3 days of stronger breath where things were improving a little bit, but you can kind of look at this chart, which helps to kind of visualize this, right? Look at the bottom, right? So here's what I'm referring to. New highs started to pick up a little bit, but look at all the new lows being made here. Now, this is just for a week. This is the month, right? So it's not for the year. What about the year numbers? I mean, you had 4 names, so congratulations if you're in any of these 4 names. EQT, which definitely been showing strength. eBay made a nice move today. BSX, another one. But you still have many more names, and take a look at the chart here, right? Look at the absence since back in here. You notice what's been happening here, right? So this is why you should be concerned, right? That the market made a new high here, and look at what has happened, right? There are hardly any names. Again, I just went over. There's 4 names out of 500 that made a 52-week high, right? This is a problem, right? The names, we need to see this pick up and this quiet down. That would give me a sense that there's a stronger market. Again, it doesn't like I don't need to be going after a whole bunch of like names in consumer staples or REITs or so forth, but it's just the fact of is the market weak or is it strong? And this could be you can't rule out that this is a head and shoulders yet, right? Left shoulder, head, maybe a couple right shoulders. I would really be watching this neckline and the lows of where we were a couple weeks ago because you're not seeing much strength of anything, right? And it's been the worst, right? Look at what happened here. Do you recognize something here? Here is April, right? Notice how the new highs just went down to about zero. And look at what happened. We spilled lower, right? Same thing in here to a lesser extent, right? So this is not this is not good. I don't know any way you slice it or dice it. Like this is not good, right? And you can't just have 3 or 4 stocks because I know growth investors, and I get it. I like this too. You can't just be focused on GEV, like in my opinion, like that because what could happen in a day, right? Somebody could decide to just rug pull this, right? And it will break. It won't take long, So the weaker the market structure is, the more that likely that you can't just think that your couple growth stocks are going to survive this, right? So basically what we want to start to see is we want to see just better market dynamics, right? And I think then, until then, you make adjustments. You could still participate in a GEV. You could still, like, I'm in Rocket Labs too. I didn't sell it because it didn't break support, right? It's hanging above the value area. Yes, it was down today, 2%, but you know, if you go through some of these other names that I'm interested in, right, in ACHR, a little bit of a more messy of a situation, but this hasn't broken, its trend yet. Are we seeing some growth stocks break their trend? Absolutely. Right. And I think that you're going to see more of this unless buyers really, because this is just, by the way, it's just evidence of market participants, right? Are market participants really going in big in this market? No. Right? It's very simple to see that and make this. It's not hard to come up with that conclusion when you don't see a lot of stocks carrying to new 52-week highs or 4-week highs, right? We've got a problem right now. So yeah, I think more stocks until institutions start coming back in, right? More stocks are going to end up being vulnerable, right? And we'll have also false breakouts, right? That's also a product of where the institutions are not involved in the market. So I'm not trying to scare anybody or anything like that for Friday, but you should have a little bit of a plan, right? And I cut some stocks this week. I cut some of my positions. We'll kind of just go from there. It's only January 8th. Right? There's no need to press when you've got weakness that's across the tape. Um, Other names, like this is another name that I think, again, high momentum name, right? So how much does this stock move in a day, right? Because again, I just don't understand how anybody could have a really big position in some of these things without, unless they're really trying to press. So the average true range right now in this stock is $3. 3 divided by the stock price, right around 26 bucks. This stock moves 11% a day. So how much are you going to own of a stock that moves 11% in a day and be comfortable with your risk? That's a judgment that you have to make, but it's certainly not the same. Here, let's do the same exercise for NVIDIA, just so that you get a frame of reference, right? How much does NVIDIA move a day? So right now, the average true range is about 590, right? Divided by the stock price, 140. So NVIDIA still moves quite a, maybe that's off, right? Average true range, it doesn't move that much, does it? 590 divided by 140. It says it moves about 4% in a given day. That seems a lot to me, but it is what it is. So yeah, so it's important to kind of give yourself a measure of implied volatility because, yes, while it's fun to participate, right? Because you don't need a big position when the stock goes from, 23 bucks to 28, right? You own 100 shares, that's 500 bucks, right? So that's something, but I don't know how you could put on like 1,000 shares of this. It's just, to me, that's a lot of risk. But hey, to each his own, and it all depends on your account. But again, it's important to understand that. I just wanted to go through a couple other names. We were talking about Arista Networks. At the end of the day, this is a member brought this name to my attention, and I am long this name in the TTG trend. But hey, this thing's holding in here pretty well. It's holding 113. So again, as long as the names are holding where they want to, right? Sorry, holding where they should. CLS is another name that's been super strong, right? Made a 52. This one did make a 52-week high, right? And it's not in the S&P, but that's what we call in the business relative strength. FTI has been doing very well. FTAI, right? So I think aerospace is still very strong, right? FTAI. Look at the comeback in this stock. I'm very disappointed in myself. I have it in the TTG trend portfolio, but I don't have it in my trading account. I kind of just missed it. The day that it did this, I was out. I was out a couple days at the end of the year, but look at the stock carry through. It's right back above all those moving averages. Very impressive, FTAI. And the reason why I'm disappointed is because I traded this a lot in 2024. What else do I want to bring up? Yeah, I mean, and the other thing is, like, don't be afraid. So the stock that I got long today, which is HCA, which saw some calls, which is a name that I was exactly looking for, because I think some of these value names, again, these are going to be trades for me. They're not going to be investments, because I don't want to hold names that are in downtrends. But some of these names should snap back a little bit. Another name that I haven't even thought about in a long time is McKesson, right? Look at McKesson above its value area for the year, right? This is another name. This is more of like a low volatility type name. CAH is another name too, right? These names do well when the rest of the market is not. So you could trade, again, you don't have to be married to any of these positions, but there's definitely something to kind of consider. So I'll probably, I'll go through many more charts for members with the day off and so forth. But I don't want to have the video this long. So I'm going to cut it off here, guys. Guys, have a great weekend, and I hope to see you in the trading room. Sign up to be a member, and you could ask questions real time, see trade alerts real time, and so on and so forth. Have a great day off, everybody.